Good morning. You're tuned into Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Mathew. And this show is all about your stock-related queries. Be it a long-term query or a short-term trade, do write to us your queries on the WhatsApp number that's flashing on your screen or on any of our social media channels or even on the YouTube live chat, and we'll take your questions from there. But before that, let's take a quick check of the markets. You have the Nifty 50 up in green, up about 0.3% in trade. Bit of a positives, in the positive, but we're seeing Nifty 50 from red to green quite often since morning today. But let's look at the broader end of the spectrum as well. You have the Nifty mid cap that's doing better than the benchmark, up about 0.5%, and Nifty small cap up over 1% in trade. Let's pull up the contributors of the Nifty 50 as well and see what's pulling the index higher at this point. You have the likes of RIL, Axis Bank and Power Grid that are contributing to the Nifty 50, up about 70 points right now. On the other hand, you have Infosys, Mahindra & Mahindra and HDFC Bank along with TCS that are dragging the index down at this juncture. But let's look at the sectors as well and see what's doing well. You have the Nifty Auto, Nifty Bank, Consumer Durables, all in the green today. Apart from Nifty IT and Metals, everything else in green. Nifty IT specifically seeing a bad day today, down about 1.6% in trade. Let's also look at some of the specific stocks that are moving. If you can pull up Suzlon, that's one of the stock that's moving today, and that's on the back of a resignation of an independent director. And Alex, the concern that there is of corporate governance that has come about. But the company on the weekend, on a Sunday specifically, held a call and they cleared out a lot of things. Brokerages, including Nuvama, says that they continue to remain positive on the counter. But other than Suzlon,
There's also Raymond. I was looking at Raymond. It's up quite significantly. Its real estate division has been picked for a 2-acre Mumbai project. The stock as a whole is up about 7%. Remember, this is a company that is heading into a split of its businesses. It's going to be, of course, the clothing and suiting business that's going to be separate from the real estate business. That is something that will come to pass. But in the interim, this is the stock that is currently listed and it's up about 7%. If I'm not mistaken, it's also at a record high. The project is for a redevelopment project, as I understand it. It has been selected as the preferred developer for a redevelopment project. This is in Mumbai, of course. A couple of other stocks that you should watch out for in trade today. We were going to talk about CEAT as well. And the stock is off the high point of the day, but it's still trading with gains of about 2.5% or thereabouts. There has been an investor call where the management has spoken to brokerages, and brokerages are quite upbeat about the commentary that has come through. Puneet is joining in to tell you about some of what the company expects to pan out in the current financial year. Puneet, what are you picking up?
Well, there are 5 key takeaways from this particular analyst call that you also mentioned correctly for CEAT going forward, and the management has been quite upfront with the commentary going forward in the next 12 to 18 months as well. So first, they have said that they are aiming to maintain its market leadership currently in mostly in the profitable two-wheeler segment that the company operates in. Currently has roughly 33% market share there and is looking to hold on to it going forward as well, despite competition working on pricing as well as newer products. The second is that it may gain more share in the passenger vehicle as well as the commercial vehicle space in which the company operates in. It has improved the pricing and the quality of products also going forward is one other thing. The third one is the export revenue for the company now. They are expecting to have roughly 25% revenue contribution from exports going forward. It currently is between the 18 to 19% range. So going forward, and exports have slightly higher margins as well because the premium products are more sold in geographies such as Europe. So that's a key positive as well. The fourth one is that despite slower growth on newer cars as well as competition in the OEM, they are expecting that because of a lower base effect in the previous financial year of 2024, there should be some growth in this particular vertical. And finally, CapEx, it will be elevated at roughly 1,000 crores for this particular fiscal year of 2025 and will include completions of capacities in the PCR as well as the off-highway tire segment. Now, brokerages have largely been positive, and effectively, if you have to summarize it, it is on valuations. So Nuvama came out with the report post this analyst meet. They have a target price of roughly 3,000 rupees per share, which is a 22% upside from the current levels. They have said that, they are expecting volume growth to be in the high single digit for the company, which is very good compared to what the competitors have been saying, as well as exports to grow in double digits and markets such as APAC to do very well for the company. They are expecting some raw material price hike in Q1 of roughly 3 to 4%, but that will largely be passed on. And Motilal Oswal is bullish on the same again, price target of roughly 2,900 rupees. One other thing that I wanted to highlight was what ICICI Securities said. It has saying that companies looking to launch the TBR tires in Q2 as well as PCR tires in Q4, which will complete the product portfolio of CEAT going forward as well. So overall, brokerages are largely positive. Valuation remains one of the key positives for the company. Back to you.
Much, Puneet, for getting us those details. I do want to draw your attention to the latest update that you see flashing at the bottom of your screen, and this is the assets under management data that is released by the Association of Mutual Funds in India. This is for the month gone by, that is the month of May. And I look at the overall assets under management for the industry. It stands at 58.9 lakh crore rupees at the end of the month. But let's take a look at some of the key details that are coming through. The first of which is that equity mutual funds as a whole, and I'm talking about actively managed equity mutual funds, the assets under management currently stand, or at the end of May, they stood at 25.4 lakh crore rupees. And in the month gone by, that is April, they stood at 24.7. So there is a growth there. Of course, that is on account of both inflows as well as the growth in the underlying. Some of the key sub-segments of this, and I will speak about the small cap and the mid cap actively managed schemes, because this is where you've seen tremendous interest from retail investors. The small cap actively managed schemes have seen inflows to the extent of 2,725 odd crore rupees, and mid cap schemes have seen a similar inflow of as much as 2,600 crore rupees or thereabouts. Cumulatively, over 3,000 crores coming in once again for this category of mutual fund schemes. There's also an inflow into large cap schemes to the extent of about 660 crore rupees, and flexi cap schemes have seen an inflow of 3,155 crore rupees. If I'm not mistaken, this is going to be another record for the inflows into actively managed equity schemes, which stands at about 34,700 crore rupees, which is quite substantial. Fixed income mutual fund schemes as a whole have seen inflows of about 42,300 crore rupees, and hybrid schemes, most of which has come through in arbitrage funds, have seen an inflow of about 18,000 crore rupees, of which hybrid arbitrage funds, which are the short tenor investments that you would make, have accounted for inflows of about 12,750 crore rupees or 60 crore rupees or thereabouts. We will revisit this over the course of the day, and there is a call in just a short while. There will be inputs that we will get from that there as well. But for now, let me introduce you to the guests on Ask Profit. We've got Ashish Kapoor as well as Rajesh Palvia joining in. Ashish, we were speaking about CEAT before I had to head into the Amphi numbers. What do you make of the latest development? And there is a significant capex announced. In the past, we've seen that has led to a performance over the next intervening period of the next few years. Is that something you're anticipating for CEAT as well?
Yeah, I think so. I think firstly, the tire industry itself is very well poised because the growth in automobile numbers has been fairly significant over the past couple of years. So with a lag, I think tire industry will get the benefit of that, and I think that should be happening now. Also, CEAT itself has been doing very well over the last few quarters. Their return ratios are improving, cash and balance sheet is going up, and profitability is very smartly moving up. So I think on all parameters, the company is doing very well, and industry tailwinds will also help them. And with the capex in place, I think we can expect very smart, the growth in profit and revenue going forward. I think a target of 30 to 100, according to me, is on the cards with the 1 year's target, with the 1 year time frame.
Good morning to you, Ashish and Rajesh. Let's start off with the queries now. The first one is on YouTube, and this one's from Shikha, who's writing in from Delhi. They're talking about the counter Devyani International. They say that they saw a run-up in this counter in the last 3 sessions. Now, Rajesh, this one's for you. What should you do in the short term for a counter like Devyani International? And also, if you can share your views on restaurant brands Asia, if there are any key levels to watch out for in this counter as well.
Yeah, good afternoon. So we have seen very strong run-up in last couple of weeks for Devyani. Now stock managed to be breakout of almost 8 to 12 week consolidation range. Looking at the breakout, we believe that now if stocks continues to hold above 170 mark, then possible upside target we can see towards 190 to 195 in short period of time. So I think those who have bought can hold the position. Trailing stop loss should be placed at around 170. If we talk about restaurant brand Asia, stock was in consolidation. In last couple of weeks, again, the same kind of behavior we are witnessing similar to the Devyani. And the way stock managed to be breakout on almost 8 to 10 week consolidation, we believe that if stocks holds above 108 level for next couple of trading session, then furthermore follow-up buying action may trigger in the stock, and then upside target towards 120 to 125 could be there. So keep your stop loss of 108 to hold the position in restaurant brand Asia also.
Manish has got the next question. He's writing in on WhatsApp and asking about Colgate Palmolive for the long term. Can it be bought at this current level, or should you wait for a dip? The stock is down about 0.5% and trading just below the 2,950 mark. Ashish, what's the view on this particular counter?
I think it's a great stock. Over the years, it has given great returns, and I don't see any great merit in trying to time it and trying to wait for a more decline or whatever. I think go ahead and buy it. I mean, I think in the dental industry, it is still a very clear leader, and the company management has always been pretty investor friendly. So I don't see any downside here, significant downside here. So go ahead and buy it. Keep it for the long run. I think it should still be a very good capital generator.
The next question is from Samir, and the counter they're talking about is Grindwell Norton. The question is, should you buy at these levels? And if there's a stop loss as well, Rajesh, that you can tell us on this counter.
So stock is almost trading near to its all-time high trajectory. The way stock has recovered in last couple of trading session, again stock has regained its upward trajectory. We believe that till the stock is not breaking below 2450, I think one should remain invested in this stock, as long-term structure is bullish. And we believe that once the stock manages to cross about 2700 mark, then possible rally can extend towards 2800 to 2850 also. So I think buy on dip should be a strategy for Grindwell Norton. Stock is looking attractive across all time.
Adani Total Gas is the next counter that we're talking about. It's currently trading at 985 or thereabouts, up about 0.8% in trade today. And the question is from Vishwanath. He's asking about the future prospects for this particular counter. Rajesh, I'll come back to you on this next one. Okay, so we have live footage coming through of the Prime Minister making his way. I believe he's walking towards the office where he's expected to hold the first cabinet meeting today. Remember, we've had the announcement of the members that will form a part of the Council of Ministers. There will be a total of 71, and along with the Prime Minister, the total stands at 72. Of course, the maximum number for this current Lok Sabha of Council of Ministers stands at 81, and so the BJP and the Prime Minister has a little bit of leeway. Of course, right now the expectation is that the cabinet will be 30 ministers, and of which there are 5 that are from the allies that have helped the NDA win the general election. We'll bring you more updates over the course of the day. As I was saying, we were talking about Adani Total Gas. Vishwanath is asking about the future prospects. Rajesh, how does it look on the charts?
Stock is in consolidation. If we analyze the short to medium term structure, stock is in consolidation mode. The higher resistance area on the higher side, the resistance area is placed at around 1040, mark. That needs to be watched closely on the higher side. If a stock manages to take out these levels, then a rally can extend toward 1200 also. On the downside, the important and critical support area is placed at around 900, 890 kind of level. So that is important level. If you get any opportunity to buy in dips towards those levels, support area level, it's a good opportunity again to buy and accumulate this stock. 890 should be your stop loss to buy and accumulate. On the breakout above 1040, 1050, you can add further more position for upside target of 1200.
Just the standard disclaimer, this is Adani Total Gas that we're talking about, which is, as you know, part of the Adani Group, and you're watching NDTV Profit, which is part of the NDTV Group, which is owned by Adani Group.
The next counter is Cochin Shipyard, and this one's from Srinivas Rao, who's writing in from Dubai. They say they bought the counter at a price of 1,930. It's slightly above the price that it's currently trading at. But they bought it from a longer term perspective, Ashish, from a 5-year perspective. We saw a bit of correction in the stock, but it has bounced back since then. From a longer term view, would you suggest holding on to it, and do you have any target on the counter as well? For the next 1 year, of course.
No, I don't have any target. And firstly, yes, the investor has bought on a fairly strong uptrend and expensive valuation. But if 5 years is the time frame, then I think given the kind of growth rate which company has been doing and the kind of expectation which we have going forward, I think the investor should be able to recover and make profits also. So hold on. With 5-year perspective, I think you should make a very decent amount of profit.
All right, got it. It's time to slip into a short break, but we'll be back and we'll take more queries on the other side. Stay tuned.
All right, interesting data coming through on the AMFI numbers that have come through for the month of May. And I was talking to you about the significant inflows in equity schemes in the month gone by of as much as 34,700 crore or thereabouts. Quite a chunk of that is coming through in the form of inflows into thematic schemes, and quite a large number of that, 9,560 crore rupees in one scheme in particular, and that is the manufacturing fund that was launched by HDFC. But then it's still encouraging numbers coming through for the industry as a whole. Sunil Subramaniam, Managing Director of Sundaram Mutual Fund, joining in to talk about some of that. Sunil, thanks so much for taking the time. Positive flows overall in equity, but also strong flows in small and mid caps continuing. What does that tell you?
It tells you that faith in the Indian economic story is strong within the investing public. I think the investing public is not worried about valuations. They're not worried about what FIIs think of India's attractiveness in other countries. What they're able to see at the ground level, the strong focus on infrastructure, the leadership of the Prime Minister in terms of setting longer-term goals, preference over shorter-term, consumption kind of expenditure. So clearly, and these reflect the main numbers. When the campaign was on, and all the data was in the public domain about India's growth story and all that. So I think it's basically been a reinforcement of that in the customer's mind. And bear in mind that relative to bank deposits, equity markets are still giving very healthy post-tax returns, probably or double the return of a bank deposit is what the equity market is delivering. So I think the customers are happy, and those who have started SIPs have found that their values have grown, and it just reinforces their faith. So I think it's all in all a good growth story. You saw the GDP numbers came out also much ahead of expectation for India. Sunil, so I think it reflects the confidence of the Indian investing public.
Which is a point well taken. But Sunil, any comments about the lumpiness of some of these inflows? There is quite a substantial amount of money that is flowing into thematic. Of course, that is because of a new fund offer. But it still stands at what, 19,000 crore rupees, of which 9,000 crore rupees can be accounted for by that one fund. But then it's still a substantial amount of money going to thematic schemes. And I'm seeing what, an 80% plus overall into equity. I'm talking about 20% increase in the inflows into small cap, 45% increase into mid cap. Lumpiness is tough to deal with from a fund perspective?
Not necessarily. If you see that two things. One is the nature of the theme. This was a manufacturing fund. So the nature of the theme is very close to India's economic growth story. The second is that small caps and mid caps are well known to outperform when the domestic economic growth story is good. It's when that suffers, large caps as a safety element come into play. So I think clearly the kind of thematic funds the money is coming in, it will also get deployed into the small and mid cap stocks. So I think it's overall the closeness to the domestic growth story is what is playing on investors and the distributors' mind. I think we should also give credit to the mutual fund distributors who have been channelizing the money into these funds through SIP. I think that's another strong thing you should look at, that people are choosing to put their money through SIPs also increasingly rather than your lumpiness. Right? That's because the NFO came at the right time with a well-known brand, and some amount of that money, is something others would have gone to other schemes. So the NFO happened to be at the right place at the right time and got it closely linked to the domestic story. So I think that reinforces the continuity of Indian flows for the near-term future. I don't think there's a cause to worry, and the markets would get valuation support from a broader base from these inflows from domestic investors.
Last question from my side, Sunil, and this is something that I've noticed in the last few months at the very least. Arbitrage funds once again getting inflows of 12,750 plus crore rupees or thereabouts. There is a bit of a shift from overnight and liquid funds to this. Is this healthy? Is there something that you would say investors should be cautious about, or is this par for the course?
No. So the nature of these flows are essentially institutional money. Okay. These are not retail flows. Okay. So when institutions are looking at it, there are two things to it. See, they saw a heightened sense of volatility in the markets in the run-up to the election because they were from mid-April. FIIs, with some news coming around low polling and all of that, FIIs were nervous, were selling. So Indian markets volatility are heightened. Arbitrage funds deliver better returns when there is heightened volatility in the market. Savvy institutional investors are aware of this. The second aspect to this is that there's a tax efficiency to investing in arbitrage because these are considered as equity taxation. So whereas overnight and liquid funds are treated as normal taxation, the debt taxation benefits were withdrawn, in the previous budget. So to that extent, even if you make, let's say, a 4% return from arbitrage, that's much better than making 6, 7, or 7% from a liquid or overnight scheme. So smart, savvy corporates sensing the volatility in the market and an opportunity for arbitrage to give slightly better returns are playing on the tax advantage of it and allocating the money. So this is not something that we need to advise them. They are very smart. They have their own treasury desk to take a call on this. I don't think retail investors are rushing into arbitrage funds, so there's no cause for worry in terms of whether they're doing the right asset allocation right or not.
Fair point. Thank you so much, Sunil, as always, for taking the time. Much value the insight that you've provided.
Thank you. Thank you.
Well, That was Sunil from Sundaram Mutual Fund talking about the Amphi data. But let's get back to the queries. And this one's on Maruti. This one's from Suresh from Kerala. They say if this is the right time to buy Maruti. Now, fundamentally, of course, Maruti was the biggest gainer in the passenger vehicle export segment. But let's see it from a technical point of view. Rajesh, would you suggest buying at the current levels for something like a Maruti?
So overall structure for Maruti is on the bullish side, but on the near-term structure, stock is consolidating. The consolidation is happening at the higher band of the price action. So yes, one can buy and accumulate Maruti. Those who wants to buy on breakout, they can wait for 13,000 level to cross. Once that level cross, then breakout trade will takes place, and then possible target towards 13,400 to 13,500 we can see in short period of time. But again, looking at the near-term, short-term structure, we advise here to buy and accumulate the stock as across all time frame stock is bullish. Your stop loss should be placed at around 12,500, and on the higher side we can see a target towards 13,200 to 13,400 going forward.
Coming back to you, Rajesh, on this next one, Monishankar Pathak, who's writing in from Kolkata, wants to know about ITC. He's got 200 shares that he's bought at levels of 436. He's looking for a short-term view of about a month or so. The stock is currently trading at 438, which is very close to the buy price.
Yeah, so stock has recovered from its recent low, and looking at the near-term structure, we believe that stock is now negotiating with its multiple supply zone, which is placed at around 445 level. Once a stock manages to take out this 445, then there could be a rally towards 460, 470 kind of zone. So I think it should hold the position with stop loss of 430.
All right, got it. Now, unfortunately, we're completely out of time here on this edition of Ask Profit. But we'll be back tomorrow and we'll take more queries. Thank you so much, Rajesh and Ashish, for joining us today and for answering those questions. And viewers, don't worry, in case we were not able to take your questions today, we'll definitely take them tomorrow. So keep writing to us. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
Hello and welcome. This is NDTV Profit. Well, we are taking stock of how markets are faring at the moment, and we're faring well this Monday morning, even though it's a quiet market. We are seeing advances for a handful of these indices. So the Nifty is up around 0.2%. The Bank Nifty is up around then, just by as much. And in terms of the pull and push, while we do have advances for a handful of banks, which include something like an Axis Bank, there is a little bit of weakness seeping in as far as some of your other banks are concerned. In terms of what's also buzzing as far as your key benchmarks go, well, there are a lot of names out there, but not too much to speak for. Of course, HDFC Bank declining by around 0.5%. The small cap index is up around 1.35%. The mid cap index also largely moving in tandem with the benchmark. So again, there has been a little bit of traction, but on the whole, it's been a very, very quiet day of trade today. And while we are building on the kind of gains that we've seen over the previous few days, and of course today we made a new life high with the Nifty hitting 23,400 at one point in time. We're off day's highs, but well, gains all the same. And in terms of your broad markets, to very quickly take a look at what's really buzzing in trade, even if you consider something like the mid-cap sector, at the moment, just top 100 mid-cap companies, well, we have gains in something like Patanjali Foods, which is up around 5.9%. Then, of course, Paytm is advancing by around 3.9% as well. And building on the kind of gains that we saw last Friday too, we have Z Entertainment up 3.8%, Yes Bank up 3.8%, and Prestige Estates is the other one which continues to move and forge forward. That's up around 3.7% as well. In fact, Prestige Estates is at it's another life high at the moment. What's weighing down on the indices is something like a Poonawalla FinCorp. That's down around 4.1%. Then, of course, I'd reckon that we've had some governance issues being raised by a board member in Suzlon, and which is why we're looking at some amount of weakness there as well. Suzlon is down around 4%. Of course, we need to still ascertain as to what specific these issues are. And we've had, an issue, rather a release come from the very company itself on the exchanges. And then besides that, we have Coforge. Coforge is down around 4% as well, followed by Persistent Systems and Emphasis. In fact, KPIT Technologies is also down. So we have about 3 to 4 mid-cap IT companies which are under pressure this afternoon. It's something that we're going to keep an eye on. However, if you consider the overall mid-cap index, we have about 60-odd advances for 40-odd declines. And that's, again, not too bad as far as the bulls are concerned from their point of view. The question is, where do we go from here? And how do we expect things to pan out? But on that note, let's move on and talk about JSW Energy. Now, JSW Energy has signed an MOU with JSW Steel for a green hydrogen project, and Vikas Srivastav caught up with Sharad Mahendra, joint MD and CEO of JSW Energy, about the purpose of the new project and its viability. Listen in.
So I would like to start with this new project that you have started for your group company, JSW Steel. What is the entire purpose of this and how it's going to benefit both the companies?
Yeah. See, when we say about green hydrogen, that is where global plans by 2030 is to have a green hydrogen capacity in excess of 60 million tons, which is a large capacity. And we also want to be future ready as to be the major supplier of green hydrogen in the energy space. And also our group company, JSW Steel, for which we are setting up this project, which is the country's largest green hydrogen project. For them also, they have a plan to be manufacture green steel, for wherein green hydrogen plays a key role. So it is a pilot project which we have started, the work which we have started on ground, which will make us ready as a supplier and JSW Steel as a user of green hydrogen. So this will give us a big learning. And as we have entered also into an MOU with our group company, JSW Steel, for 90,000 tons of green hydrogen by 2030. So this is a pilot project, which is country's largest project, which is 3,800 tons of hydrogen per annum, which is equivalent to 25 megawatt capacity of energy, solar energy. So this is what the groundwork has started, project work on ground, and we are confident that in Q4 of current fiscal, this project will be commissioned.
Okay. So you said this is one of the largest projects in India that you will have done. So recently we also met the management of GAIL, and they said that the issue or the challenge that they are facing for their project that they are setting up is that the pricing is still very high. It's close to 500, 600 rupees per kg, where the commercial viability of that becomes slightly, challenging and finding customers, because gray hydrogen is available at, less than 1/3 of that price.
Yeah.
So what according to you is, going to be the viability of this project? I mean, would you like to only stick with the captive projects, or you would be looking at commercial projects as well?
Yes. I agree that today the price levels, cost which are there are on a higher side as compared to the grey hydrogen. But in this particular project, one portion of the cost which is significant is the storage of hydrogen and then supply. Here there is no storage, so which has resulted in optimizing the cost and giving us the desired returns, on which benchmark returns at which JSW Energy works. Here there is a direct pipe. It's a co-located plant where the JSW Steel manufacturing facilities are there. It in the same facilities where we have our JSW Energy facilities are there. So we are going to commission this project there, and it's a direct supply through the pipeline, which has reduced the cost and has given us the desired returns. But yes, going forward is still when taking care of the captive requirement and also looking towards the possibilities outside, we are going to be ready after the commissioning of this project. And as and when we see that the costs are optimizing, the prices are such that it is giving us the desired benchmark returns, we will be open for even outside the group captive requirement. And not only this, even going downstream, whether ethanol, methanol or green ammonia, all these areas also we are continuously exploring. And as I said, as and when we are getting the desired returns, we will be going ahead in that also.
Right. So just to take it a little more, if you can highlight a little more on this and give more details in terms of what is the cost of pricing you are getting it if you are setting up a project without storage and with storage?
As I told you that when we do a project with the storage and without storage, apart from storage, there are many other factors also. But there is definitely a significant 20-25% cost optimization which happens if you are not setting up a storage facility and directly supplying through the pipeline. So that is what we allowed us to venture and get the desired returns on this pilot project. But this project also should be seen that protecting our returns, and also it is being a largest green hydrogen plant also as a learning. Also, I take this for us as JSW Energy and also for JSW Steel to be future ready when it is giving the cost optimizes. So if we are also making ourselves future ready with this project.
Right. One more last question on this topic. Last time when we met, that you had said you are kind of fast tracking your overall investments of close to $12 billion to reach your 20 gigawatt by say 2030, which you are now planning to achieve by 2028 or something like that.
Yeah.
So what percentage of that investment would be towards a green hydrogen and related areas?
One is that 20 gigawatt when we had said by 30 was pure generation capacity.
Okay.
All storage capacities, whether green hydrogen or storage capacity, is over and above that. So when we talk of the capacity, we had said 20 gigawatt by FY30, as you are right. And the first milestone was, the first phase was 10 gigawatt by FY25, the current fiscal.
Yeah.
So I am happy to tell that we are absolutely on track to achieve the numbers of phase 1 of 10 gigawatt plus. We are absolutely certain that in the current fiscal, we will be crossing that number of 10 gigawatt. And we are working on our capacity addition target to reach a capacity by 30. Then that is the time when we will be we are continuously working to announce a revised number for FY30, because this 20 gigawatt of FY30 number is definitely happening significantly earlier with the kind of order books and our participation and being successful in the competitive bid space, the kind of capacity order book which we have. So we are on track to deliver what we have said a few weeks earlier to you also, that we will be fast tracking our growth. So we are absolutely on track. Coupled with this green hydrogen, as I talk, apart from that, the energy storage. Right. Because before I come to the details of our energy storage plan, it is important to note that what is the kind of demand growth and the growth pattern. See, we are seeing demand growth continuing, and first 2 months have demonstrated that with the extreme weather conditions, driven with other factors of urbanization, manufacturing, everything, the demand growth is healthy and will continue to remain in that range. Even if we take a conservative demand growth of say 6-7% only, that also in energy terms means a significant number. If we see last year has ended with a country's demand in energy terms of almost close to 16-25 billion units. And even if I take a 6-7% conservative demand growth, which means every year at least 125 to 130 billion units are required. For which, when we convert in the megawatt capacity additions, what will be required is, even assuming 5 to 6 gigawatt every year, thermal will also get added. Balance 20 out of the 20 gigawatt capacity which is required to meet this incremental energy every